This program is brought to you by Real Estimate. Get a free real estimate of your home's value today on the realestate.com.au app.
Welcome back. There are about 2,800 auctions scheduled to take place this week. That's down 14% when compared to the same week last year. New South Wales will hold about 980, with about 860 in Sydney. Victoria will hold about 1,200, with virtually all of them in Melbourne. Queensland will hold about 280, with roughly 200 in Brisbane. South Australia will hold about 160, with about 150 in Adelaide. Western Australia, Tasmania and the NT will hold 32 auctions between them, and the ACT will hold 95. Taking a look at the most viewed properties going to auction this weekend, and in New South Wales, the top property is 14 Meath Place, Blacktown. This home's being advertised as renovate or detonate. It looks like a hoarder house filled with unwanted items. The land size is good, hence all of the interest. The top property in Victoria is 24 Baird Street, Greensborough. This four-bedder has 2 bathrooms, 2 parking spots. It's got a very dated interior which could do with a spruce up, but it sits on about 700 square metres, has a price guide of roughly $860,000. The top property in Queensland is 23 Yandina Bly Road, Maroochy River. Now, this massive home sits on 16 acres, is located inland from Coolum Beach. The property has 4 beds, 4 baths, lots of indoor and outdoor living areas, a large pool and views of Mount Ninderry. The top property in South Australia is 55 Tusmore Avenue, Leabrook. This 3-bed is just minutes from Norwood and the Adelaide CBD. The home's filled with light due to all of the windows. It's also got 1 bathroom, parking for 4 cars. Asking price is $1.25 million. The top property in Canberra is 72 Samaria Street, Crace. This modern home was built in 2015, has 5 bedrooms, 3 bathrooms and 3 parking spots. It's perched on the top of a hill with views from the 2nd floor of the foothills around Canberra. Land size almost 800 square metres. And the most viewed property on the REA Group website this week is a massive estate in the Adelaide Hills. The address is 9 Manoa Drive, Upper Sturt. It's located close to the Mount Lofty Botanic Gardens in a popular wine region and tourism district. Now, this property was built in 1897, was the summer residence of the former Attorney General of South Australia. It sits on 17 hectares. It includes the Stone Manor, complete with stables, 2 renovated Airbnb cottages and 6 tenanted home units. All up, there are 28 bedrooms, 16 bathrooms and parking for 40 cars. You could convert it into a boutique accommodation and conference facility, or use it as a wedding retreat or a private residence with multiple income streams. This whole thing will be sold fully furnished. The agents are currently taking offers. And for more on property, I caught up with Angus Moore from REA Group.
We've seen a bit of a pickup in demand post-rate cuts on realestate.com.au. We are seeing quite a bit of interest in properties. And notably, we've actually seen a pickup in prices in Sydney and Melbourne in February. Prices, particularly in Melbourne, were up quite strongly following that rate cut. Though, obviously the rate cut was late in the month and we'd expect that there was probably some anticipation of that rate cut as well. But that is particularly notable for Melbourne because it's been a pretty soft market for going on 3 or 4 years at this point. And so the fact that we saw prices up is perhaps signs that things are starting to turn.
Yeah, and how have clearance rates in general been tracking across Australia recently?
They have been a little bit softer than where we started the year, though still up a bit on what we were seeing towards the end of last year when things were starting to get quite soft in terms of clearance rates. So certainly not setting the world on fire, nothing like as strong as we were seeing in the really, really hot conditions a few years ago at the end of 2021, early 2022, but still a bit better than we were seeing towards the end of last year when there was a lot of stock around and it was perhaps not as competitive at any given auction.
All right, I want to talk to you a bit about the building sector. We've got a couple of charts we can put up. First one looks at the number of homes that have been completed, so basically the construction figures. What are they telling us right now?
Yeah, I think it's an interesting picture that we're seeing at the moment, and kind of the short thing to take away from it is we're just not building enough homes at the moment. You can see there we're well behind the sort of pace we need to hit National Cabinet's target of 1.2 million homes over 5 years. And we're also building less than we were during the late 2010s, despite the fact that the population is growing pretty strongly at the moment. And so, really, we're just not building enough homes to keep pace with what we need. And we're seeing that in the fact that rental markets are incredibly tight and rents are growing very quickly.
Yeah, I think you guys released a report recently showing rental affordability is still at a really tough position right now.
Yeah, that's right. We had our rental affordability index out last week, and what it showed was rental affordability is at its worst level we've ever seen on our records, which go back to 2008. And the big part of why we've seen that is the fact that there just aren't enough rental properties at the moment for the number of people looking to rent. Rental availability is incredibly low. Vacancy rates are extremely low around the country. That's been putting a lot of pressure on rents, and we've seen, as a result, incredible growth in rents over recent years. Perth's the one I like to quote here because it's particularly astounding. Rents are up 80% in the past 5 years, which is astonishing growth.
All right, we've got another chart showing the construction sector's challenges, basically. The length of time it's taking to build a home or an apartment just seems to be going out for longer and longer. This is obviously a key part of the whole issue with supply.
Yeah, I think this is perhaps an underappreciated fact too of why it's been so hard for us to build homes over the last few years. It is just taking a lot longer. I actually like talking about the detached houses there, which is, maybe less stark looking than the apartments, but detached houses pretty consistently take 6 months to build from when we break ground to when they're finished on average. And that was true for, 10, 15, 20 years prior to the pandemic. At the moment, they're taking more like 9 months, which doesn't sound like a big increase. But when you actually add it up and look at what that means for the pipeline, it means we're probably about 30,000 homes behind where we would normally be in terms of homes that people can actually live in. So it is a big part of the story for why we're not completing as many as we ordinarily might. Now, it's not the whole story. We're also not actually starting construction on that many homes at the moment either. So it's not just the pipeline being slow. It's also that there's not as many going into it. But I think it is an important part of the story here.
We've also got chart 3, which basically looks at building approvals by location. And clearly Victoria, or Melbourne in particular, seems to be building a lot more than everywhere else.
Yeah, and that's been true for quite some time now. Victoria builds just a lot of homes relative to its size. I mean, it is obviously a very large state, but even disproportionate to its population, it builds a lot of homes. And a lot of those homes are detached houses built in outer Melbourne suburbs, particularly Melbourne's west. Something like 1 in every 8 new homes across Australia is a detached house in the outer parts of Melbourne, which is pretty astonishing, really. What we're not seeing as much of at the moment, compared to what we were during the 2010s, is higher density in the inner cities and middle ring. That was a larger part of what we were building in Melbourne and Brisbane, and to some extent Sydney, in the 2010s. And we're just not building as much of that at the moment, as you can see there.
Yeah, the final chart goes into that density in a little more detail. I guess this is another issue the housing sector's got to deal with.
Yeah, exactly right. We're kind of not seeing as much density at the moment as perhaps we were during the 2010s when we were building a lot more higher density, apartments and semi-detached homes. We're just not seeing that as much at the moment. And in fact, what we're seeing at the moment is pretty soft conditions generally in terms of building approvals. We have seen a little bit of a pickup in terms of higher density approvals. In January, they're up quite strongly, about sort of 13%, though it is a very volatile measure, that one, as apartment projects can be very large. And so from month to month, it can vary a lot.
Angus Moore from REA Group. Thanks for coming on the show.
Pleasure. Thanks so much for having me, Ed.